Morning all, how are we all doing? Happy Monday. We're back for another week. How's everybody? Morning Danny, Baggy, Virginia, Kennelly, Paul, Pip, Burke, Andres, how are we all doing? Morning Steve. Morning Ladder, morning John. Right, let's kick off with the news this week. Over the weekend, not a lot's happened. Rubbish. So there's nothing to report over the weekend news-wise. We've had the Fed come out and basically say that there's a little bit more increase in rates coming, which we know, don't know when, which we know. So nothing exciting on the Fed side of things. Nothing exciting at all, really. A bit of news out of China this morning. The CPI figures going down. So that's all good for them. Well, it's not really, but it doesn't matter. We don't deal with them. And that's it, really. So nothing exciting. Morning, Jerry. Morning, Amy. Morning, it's time. So no news over the weekend. This week, we've got a very quiet day today. We've got Bailey speaking at 4 o'clock. So no news to write home about today either. We've got the claimants change for the pound tomorrow morning. Apart from that, that's it for tomorrow as well. So everything kicks off basically on Wednesday this week. So the New Zealand rates are coming out on Wednesday. They are forecast to be 5.5 as they were before. So if we look at the New Zealand dollar fundamentals, they are the highest interest rate at the moment at 5.5. Their inflation is the second highest, third highest in the world, kind of joint second with Australia. So it's unlikely they will do anything drastic to increase their interest rates moving forward because obviously they are very, very high as it is at the moment, but needs must. So they'll see what happens with inflation. It'll be led by that. But we're not expecting an increase there. So 5.5 is what we should get. Very difficult to tell what impact that will have on the New Zealand this week. Could go up, could go down. Wait and see. We've got low speaking after the interest rates are released for New Zealand. So Aussie and New Zealand move together a lot of the time. So we'll see a lot of movement on both of those on Wednesday morning. We've got Bailey speaking again on, quite busy this week, isn't it? Wednesday. Then we got the CPI figures. So this is the big one this week, 130. We've got the inflation figures for the US. So we are expecting inflation to have gone up month on month. Annually, obviously come down. So it'll be quite critical what that result is, and that will decide what the Fed do next. So important figure coming out there. We've then got the rates for the Canadian dollar on Wednesday afternoon. So we've got the New Zealand in the morning, the Canadian in the afternoon. The Canadians are putting their rates up to 5. Well, that's the anticipation anyway. And then we've got the press conference after. So that's where the move is going to happen for the Canadian dollar on Wednesday. Then Thursday, we go into the GDP for the pound. We've got the PPI unemployment claims for the US on Thursday, and then University of Michigan on Friday. So busy week. But the week does not get busy until Wednesday. So likelihood is Monday, Tuesday, quite possibly we'll see a lot of consolidation unless there's anything dramatic happens on any of the other currencies in the news. So expect just flopping around really this week to begin with. DAX this morning, we've got a gap fill in play. US dollar, if you've got a US dollar yen long on, as I have, which got taken on Friday. I've just moved that to break even this morning. I think this yen is going to continue on its rally. So I don't want to be long anything against the yen. So the US dollar yen have got a long on at the moment. I'm still short yen, as in pound yen and Swiss yen shorts. So hedged on the yen, but don't really want to be hedged on the yen, to be honest. So I don't think the way this has reacted today at that resistance or potential resistance, I don't think that is particularly going to be a good long. It might put in a new bottom, maybe, but I suspect more likely we're going to see more strength in this yen moving forward, especially if we get unexpected news on the CPI figures this week for the US. So up to you what you want to do with it. I've decided to just break even that one. I'd rather not go into drawdown that way on the US at the moment. If those CPI figures come out as negative, we might see a big drop in the US. And obviously, if we see a drop in the US, we could get a rally in the yen at the same time. So this could go quite parabolic. Just being cautious at the minute with the yen. So, yeah. DAX this morning, we've got the gap fill play. So there is a long opportunity on the DAX. I've just got in a long here myself, just to see if we can get that quick rally up there this morning. How long we got to the open? 2 minutes. So with the DAX at the moment, we've got a couple of gap fill opportunities on the DAX. So we've now got 3, including today's. So Friday, we looked at the low and a rally up to fill that gap and that gap. Yeah, so long plays basically up into here. And then obviously potentially a continuation short. We still don't know what's going on with these indices. The volume is contracting quite dramatically in these indices at the moment. So ATR is dropping, which tends to mean that we're going to go back into a bull market. However, we're not necessarily seeing the bull rallies starting yet. So I think there's a good chance this may well just continue the way it's going at the moment. So gap fills and then potentially drops. So see if we can get a rally out of this morning. As I say, I've just taken a long on it this morning down here just to see if I can get a quick play to the upside, but we'll see. So the gap's there, thereabouts, somewhere around there. But we'll see what happens. I just realized I'm not going to take the ORB because I've taken that. Never mind. So yeah, so there's the DAX. Morning JC, morning Peter, morning Mimpo. So that's the news covered. We'll have a look at the FX pairs in a minute after the open, but there's no ADRs today so far. There's obviously no weeklies because it's Monday, and there's no monthlies at the moment either. So no massive movements on the month yet. And there's no ADRs so far today during the Asian session. Oil, we had a little bit of oil news over the weekend. Nothing particularly dramatic to do with oil, but there was mention there. US Department of Energy issues requests for proposals to purchase another 6 million BBLs. That's barrels, isn't it? BBLs stand for barrels? Billion barrels? 6 million billion barrels? No? For Strategic Petroleum Reserve. Anyway, US is looking to purchase a load of oil. So I'm not quite sure what impact that's going to have. But Friday, obviously, we had that big rally. So we did break that high on Friday. And remember, the next target we were looking for is where we bounced. So target above there is there. And then we've got another one up there at 125 ADR. So if we're going to stay in this range, we've got that level just within ADR. And then we've got 125 ADR today. Right. DAX, there's your pre-market open. Your pre-market opening range for the 15-minute. 5-minute is there. So we'll see where this goes this morning. I'm already long on the DAX. So the ORB EA won't take a long for me today because I'm already in it. Only trades if there's no trades on. So we'll see where we go. So gap fill target is there or there, depending on obviously, depending on how you view gaps, but somewhere around there is where you want to look at potentially a TP if you're taking a quick scalp play intra-session, really, just to get the gaps done. Morning, Astro. So ORB so far long on the pre-market. So looking at longer term targets today, unlikely we're going to get anywhere near this gap today. This is 200 ADR, 225 ADR. So unlikely that's going to be on the cards today because it's just too far. ADR today is Friday's high. So that's potentially upside target. So if we get that gap fill done and we want to rally today, then upside target would be ADR. Downside target obviously would just be Friday's low, which is last week's low as well. But so far, not a lot of movement. Very little movement, in fact. US indices all gone long as well. Well, sort of. Very little. Not a lot of volume at all. So, as I said, I'm not sure we're going to get masses and masses of volatility up until Wednesday anyway. So we'll see where we go. But with the DAX, it's just a case of waiting, really. Okay, we'll have a look at the FX pairs while we're waiting for that to do something. Morning outro. How goes it? Hopefully you didn't take the 5-minute pre-market today, because that was a stop out short, but you are long. A nice tight stop. 5-minute, actually the 5-minute and the 15-minute pre-market today are the best gap ranges, really. I've got quite a wide stop on this. So looking at there, aren't we? So you got about 40 points to the upside. That 2R, isn't it? Morning, great. Okay, got 1 minute to go. So fairly nice opening range forming on the DAX at the moment. It's a good size. Right. RSIs. So there's not a massive amount of RSIs to look at today either. Might be quite a short one today because we're not expecting a lot of volatility. Not a huge amount of movement going on this morning. And yeah, not a lot of setups either. So it might be quite a short one. So if anybody's got any pairs they want to look at specifically, let me know this morning. But I'm just going to run through the RSIs basically because that's all we've got. There's nothing on the hourlies at the minute. We had quite a few extensions on the hourlies on Friday last week, obviously, because we had some decent pushes. Markets sold off heavily on the indices on Friday. We had quite a lot of volatility on the yen. So we had 3 ADR days on the yen. So there was a lot of ADRs there and RSIs extensions there that you could have got into positions on. But everything's sort of calmed down and sort of come back into rotation now. So the Swiss yen, as you can see, we've had that big push this morning on the yen and a retracement. So we kind of reset ourselves at the minute on these. So if you look at the RSI extensions we've got in the 4 hours, these are all kind of pound CAD related at the minute. There's only the 4 of them. So pound US dollar. So that was an extension. Actually, that's just come out of extension. So pound US dollar was an extension back up into resistance up there, which was your monthly high. So it came straight off of that on Friday. So that's your extension. That's kind of done. So you've missed that. You should have been in that on Friday on the reversal alert there, but it's right at the end of the day. Unlikely. Pound CAD. So that was an extension, and we had the big whipsaw on Friday on that one. So extended to the upside. So this is a really good extension, all the way back up to sort of 85, nearly 90. This was. And it's basically all pushed in one day. So we've gone pretty much from sort of 50 level all the way up to huge extension on Friday on that big rally we had with the pound and obviously the Canadian dollar and the US dollar movement. So big extension there. I've got 2 on that at the moment. That's an H1 RSI extension from Thursday last week. So initial entry was on Thursday, second entry taken on Friday. Since then, we haven't gone anywhere. We're stuck completely sideways. So again, with the Canadian dollar, unlikely to see an awful lot of movement until midweek. So it's whether or not we get any rallies or drops on the pound, but nice mean reversion opportunity. That propulsion gap would be the obvious target to aim for with those positions. So roughly ADR today would be decent if we can get an ADR move to the downside. So we've got these propulsion gaps here to aim for as targets, that one there as well. And we've got further one down, but that's kind of done. So that area there is kind of what I would play as the ultimate kind of support. Big accumulation. That's the break. Retested it, pushed up. If we come back down, that's where we're likely to find the next batch of buyers coming in. So, but pound CAD nicely extended, or was extended on the hourly and extended on the 4 hourly. Just coming out of extension now. Euro CAD, big strong push up. First entry taken on that one on the hourly RSI extension on, I think we've got on Friday. Yeah. So the entry was there. The 5-minute reversal alert was in there. Nice rejection of those highs. We need to come back down and retest this area here. So that high double resistance, yeah, just around about ADR today. So that would be the obvious target for that short. Just put that in. Haven't got a target on that one. So somewhere around there, ADR to the downside, obvious target there. We've got this propulsion gap here as well to aim for, and that one there. So this sort of break that we started in London on Thursday, got retested, added to it again, pushed up. And obviously, we know there's a massive rally on Thursday. So that was Wednesday, wasn't it? Thursday, and then Friday we just went sideways. So that's 4-hour RSI extension, only just up in the 70s though. CAD Swiss extended to the downside, long opportunity on last week. Target on that one up there somewhere. So this is a 4-hour RSI extension, got nicely embedded on Friday last week. So the 1 hour entry was there in Asia. That's a little bit too close for a target on this one. So I would look at basically somewhere just under 150 ADR. So if you look at where the support is there, that's your obvious target. So that is the previous monthly low. We just obviously sat in consolidation for absolutely ages. Came down, hit support, bounced off of it, slammed through it. So if we are going to continue on a downward momentum, we'd be looking at high, low, low down there, high back up into resistance there. There is also that level there as well. So that is a decent target, that propulsion there, which is basically just that low, failing that level there. So that's more realistic financially. From a price action perspective, that could be where we get a reaction. So if we push up into that area, be watching price action when we get there. So that 37. So that's just under an ADR, basically, that resistance there, potential resistance, that support. So we're looking for an exit there. If it pushes down, obviously, that's fine. We'll just add in. This is the new spike, basically, that we've got as the downside target on this. So this week, obviously, we're waiting for the CPI figures for the US. Those are going to have an impact on the Canadian dollar. So if you look at what we've got news-wise this week for these CAD pairs, obviously the statement on Wednesday, the rates on Wednesday, is going to be the key driver for the Canadian dollar. But we've got the CPI coming out an hour and a half before that as well. So Wednesday, really, I can't see any movement happening on the Canadian dollar before Wednesday. No one's going to enter any large orders ahead of Wednesday because they don't know what's going to happen with these rates. Yeah, if we get an unexpected rate announcement, you're not going to have tons and tons of orders in the market ahead of that. Last time we had an increase. We went from a 4.5 estimate and we put an extra quarter on. So we are now forecasting a 4.75 to 5. Unlikely we're going to get anything different to that. It's not like they're going to go up by 0.5%. Well, they shouldn't do. There's no real reason for them. If you look at the fundamentals on the CAD, inflation is sitting at 3.4%, come down 1% quarter on quarter. So that's all going in the right direction. Unemployment is going up. So I think the reason they're trying to get up to this 5 level, which I think will probably be terminal rate if this all carries on as it is to have that final push to make sure that they keep that coming down fast, and then they'll be able to start freezing the rates and then gradually dropping them from there. So all these central governments, when you start getting to the 5s and the 6s, these are the levels which really impact people's finances because they impact mortgages, and mortgages is the big outlay that everybody has. So these 5s and 6s is really where they would love to not have to push beyond. So we're going to get there with the Canadian dollar today. I think that's probably going to be their target terminal rate. So from there on, same with the US dollar, it's kind of neutral, bearish. So with the Canadian, for example, it's unlikely we're going to get bearish price action this week. We have seen it though. New Zealand dollar, for example, we got an as expected there, and we got an absolute collapse in it, didn't we? So, but typically when you put your interest rates up, up goes your currency. So we should get a rally on the Canadian dollar this week. And if we get decent CPI figures on the US, we should get a rally on that. So longs on this, in theory, we should be looking like that. You know how this market is reacting at the moment? It's completely illogical. So who knows? Right, so your 5-minute opening range break is in on the DAX, which is long. It has retraced, though, twice. So lots of big bearish wicks there. ORB is in. That doesn't look particularly enticing this morning, does it? See what happens. We didn't get anywhere near the gap fill there, but the sellers have certainly stepped on the buyers this morning. So bear in mind with this DAX, we are coming out of an absolute collapse day. Yeah, so well, week really, but from Friday, obviously we pulled back on that big drop. Yeah, so the week last week obviously was collapse. So I can't see that being the end of the pullback, which is why I would anticipate them trying to get back up into there. Same sort of thing as that, basically. Market structure just continuing on its downward journey. But equally, I don't think it's going to get all the way up there. If you put a fib on this, you'll probably find this is a flag. 23 retracement. Yeah, it's nearly a pullback, isn't it? 38. So could that be just a flag break short? In which case, obviously, that'll be a short. So potential breakout at that level today will see us running down to retest the low from Friday. So if the opening range breakout to the upside doesn't work today, the ORB short has got a potential to move down to ADR. See where we go. Right, so that is all of your RSIs covered this morning. All done. As I say, there's no ADRs. So that's it. Nice and short and sweet. Anybody got any other things they want to look at? Aussie dollar, New Zealand dollar. Right, it's coming down hard this morning. So Aussies, yeah, Aussie collapsing today. New Zealand dollar coming down with it. So Aussie, New Zealand, you can see obviously that's dropping quite hard, which tells you that basically they're just both dropping together because New Zealand is dropping as well. So yeah, it's I mean, the Aussie dollar, New Zealand dollar isn't set up for anything for me personally at the moment. Obviously out of the squeeze, and we've done the retracement into propulsion on Friday last week. We hit that. Still got the potential to come back and just completely fill this gap in, which is that's the New Zealand rate. So this is where the New Zealand rate increased. Stayed as it was. So we got the as expected rate on the New Zealand dollar, and then after that, here we had the Australian interest rate increase, which they rallied on. There's no reason why the Australian dollar should be bullish. So I don't think there's any reason why this shouldn't continue down. However, there's no massive reason why the New Zealand dollar should be bullish either. So it's difficult to call. There's no setups on it at all at the minute. So I would just be waiting for something to set up, really. That one. And the Aussie dollar CAD. So Aussie CAD got buys on at the minute. That's coming down this morning. Again, Canadian dollar, same as the other Canadian dollars. News is on Wednesday. So it's unlikely the market is going to do any big rallies on the Canadian dollar ahead of Wednesday. So it'll be pushed around by the other currencies. So if the Australian dollar is incredibly weak and continues to be incredibly weak, Aussie dollar will come down. But the Canadian dollar is not really going to get manipulated today, tomorrow. It may well get put into a rotation. So, when there's no fundamental reason to be continuously buying or selling a currency, this is where we tend to get ranges and rotation days. So the market just moves up, moves down, moves up, moves down. It's just waiting, basically. It's a holding pattern. So that's kind of where we are. So good looking buy opportunity right now. Down in propulsion, double bottom. You've got a good support coming up from Thursday's low. I'm already long though. Aussie dollar yen ADR. So there's your first ADR of the morning. Again, as I said, so this is now day 4 ADR. So as I said, these on Friday, watch these ADR hits on the ends, because I don't think there's any reason why we shouldn't see continuation strength on this yen, which means everything down against the yen, basically. So if you're going to buy anything against the yen at the moment, you are fighting a potential big, strong freight train coming towards you. So if you're going to go long on these, obviously wait for the reversal alert. So M5 just dropped down, wait for that reversal alert. So you've got some buyers on your side. And just don't get greedy. If it gets in your direction, this is kind of one of those instances. I don't like break-even stops or use break-even stops very regularly. But if you are fighting against momentum, if you're fighting against the trend and you're trying to get a reversal against the trend, those are the times where you want to be using your break-evens, because there is a higher probability of you being wrong, isn't there? Because it's been doing that for 4 days. And it's not just been doing that for 4 days. It's been doing that at ADR for 4 days. So if you look at the price action on this, so that day there was 76. So ADR on this is 84. So first big down day was 100. Friday was 87. Today so far is 87. Yeah, ADR is 84. So you've got an ADR day, ADR day, ADR day. Yeah. It's coming down. We've been expecting and waiting for all these yens to power up for weeks. It's finally starting. So you don't necessarily want to be fighting it, do you? And that's why I've got that US dollar yen break even on. I'd rather be break even. I had an opportunity to take like $250 odd out of it this morning when I woke up. And I thought, I've got 150 ADR, which is a lovely previous support, which should act as resistance. So if this is going to rally up, that's a logical spot for a bounce. If not, I don't really want to be in it, because the likelihood is it's going to collapse. So yeah, Aussie dollar yen, up to you. I would be less inclined to be taking ADR reversals on yens today. These things are probably going to continue. We will see. Okay, so DAX whipsaw this morning off the 5-minute opening range. Long and short. Morning, traders from Pontevedra. Pontevedra, even. Good morning. Hot and sunny. Wish I was somewhere hot and sunny. Morning, Michael. Wayne, in the RSI dashboard, do you find the median price the best when you did your backtesting? Yes. Well, no, not the best. What I prefer. Aussie dollar CAD, ADR. Aussie dollar, really not happy this morning. There's an ADR on that one. So just looked at this one. So we got the previous day's low there, that blue dotted line. Potential bounce point. So there'll be limit orders sitting there to buy up. Seeing if there's no news on anything Australian. a blatantly obvious chart. Currency strength. If you haven't gone there yet, I'll save you some time. Don't. There's no point. Look at this. The Australian dollar is weak today. Really? So all these currency strength meters or charts show you is what you can see on your chart. So I can tell you right now, the Japanese yen is strong today. The Australian dollar is weak. And the New Zealand dollar is fairly weak. The US dollar has been doing pretty well. You can see that because it's all coming down on the chart. So utter waste of time. Yeah, so backtesting. Morning, Neo. I stuck with the median on the RSI purely because that is what is used. That is the closest to what is used in the TDI, the Traders Dynamic Index, which is what, which is kind of what led me on to the RSI when I was, just doing courses, the usual stuff. So I just stuck with the median, but there's no right or wrong, especially if you're position trading. Yeah, whether you get in there or there because you've used the median or the close, in the grand scheme of things, is totally irrelevant. It doesn't matter at all. If you're scalping, yeah, but I mean, if you're scalping, then the difference between the close and the median on the RSI is going to be more signals or less signals. The median I just find a little bit more smoothed out. Oh, sorry, the close is a little bit more smoothed out. The median is a little more jerky. But it just doesn't make any difference. Pick one. It's the periods that are the important thing. Yeah, the 21, the 14, 7. That's what really is going to change whether you get a signal or not. If you miss a signal because you've used the close and I've used the median, I get that one, you don't. Is that right or wrong? I haven't got a clue, neither of you. So it doesn't matter, does it? So if you use a close or you use a median, you would just get different signals. But as we know, signals are just a means of getting into the market. We don't know whether they're going to be right. The odds of the signal working or the condition being correct for a reversal is 50-50. So whether you get in on your close or your median, your odds are exactly the same. There's no advantage on on the backtesting I've done anyway. Go and do it yourself. It's really easy. I've got a video on the website. I think it's on the RSI page. Yeah, how to backtest the RSI and find an edge for basket trading. This is obviously, that's what I do, or position trading. So, if you go and this is the median. So if you just draw a line where you got all your signals on the median, just rough. There's an extension there. I'm just using the 75 here at the minute. An entry, there's one there, one there, one there, somewhere around about there. There's one there, long. Yep, so you got one there, one there, one there, one there, one there, one there. Yeah, so that's a short, that's a short, that's a long, that's a long, that's a long, and that's a long. Yeah, you see what I mean? Aussie dollar CAD, whether you use the median or the close or whatever, it doesn't matter what you use there, it's wrong. Doesn't matter, does it? So if you switch this now over to the close, yeah. So you wouldn't have had that, you wouldn't have had that, you wouldn't have had that, you would have had that. So using the close, you would have missed out on the 3 profitable trades and you'd only got into the squeeze. That's in this case, obviously. Other cases, you're going to get completely different results. So, but yeah. It's a condition indicator. All the RSI is doing is telling you that there is a stretched condition in the market, i.e. the banks and institutions have been driving hard in a direction. You can see that with price, obviously. If you've got, looking at the Aussie dollar yen, for example, yeah, you can see the yen is strong at the moment. We know that because everything is coming down hard against the yen. It doesn't take a rocket scientist to think, right, well, you're suddenly going to get a load of RSI extensions on all yen pairs because the yen is strong. So it's only used the dashboard. I built the dashboard so I don't have to watch the charts every 4 hours or every hour. You know, the whole purpose of this thing is that it just goes, go and have a look at that. It's a condition in the market. Do you want to trade it? Can you trade it? Does your exposure allow that sort of stuff? Aussie CAD. We just looked at that one, haven't we? Right, let's quickly go back to the DAX. So DAX has broken short. About to stop out on my long. Already have stopped out on my long. So DAX, if we're going short, so watch this low pre-market. Is that even there? Yeah, so that is pre-market low. So this is exchange open. So watch this for a bounce potentially. It's not a particularly good level, the exchange open, but this might be a good spot to add shorts. Might wait for a bit of a pullback off this. So this is probably a good area to get into a pullback short. And then we'll look at testing Friday's low. So that would be your low today, ADR to the downside. So if we are going short, that's going to be your first potential support area. We've also got this area here, which is the previous days. This is why this is on my chart, this previous day's low, this blue dotted line. Because the previous day's low, even if you get wicks beyond it, and this is a really good example on the DAX today, when you get wicks beyond it, the reason these wicks are here is because they bought that low. Yeah. So the reason these wicks exist is because the sellers tried to drive beyond yesterday's low. The guys that bought yesterday's low bought it again, which is why we had the rally. So when you get back to that previous day's low, even if it's been invalidated the day yesterday, that is an area the market bought from. So you want to be watching the previous day's low and yesterday's low as a zone. This is where buyers, this is where the sellers ran out of steam and ran into buyers. This is where the buyers bought that level after the sellers tried to drive back through it again. So this is a good, strong area of support. Where exactly in there you're going to find your support, if you find your support, and obviously it depends how many sellers are in control today, is where you're going to get your bounce from. So somewhere between 3/4 to 1 ADR today, I would expect to see a decent bounce out of that level or some kind of rotation. If we get there, got to get there, yeah. So selling underneath that low. Okay, so if we're buying this low up, I'll be looking for basically a pullback into here. This is going to form a propulsion gap wherever this candle closes. I'll be looking for the sellers to add on to that position. So wait for that pullback and then get in on a break of that low. And obviously the target will be previous day's low or yesterday's low, depending where we get, what sort of price action we get when we get there. Right. US dollar yen. Oof, just missed me. Oh, look at that for a miss my stop. To the pip. Spread saved me there. Euro New Zealand is doing well at the moment. So euros, we're looking for longs at the minute. Euros should be strong. Obviously, we've got that weakness in the New Zealand dollar and the Aussie at the moment, so which is good. But euro, we should be looking for buys on this. It is bullish, the euro, but not massively. So looking for continuation rallies on this. For the upside, I'm targeting at the moment this little propulsion gap here, which is within ADR today. So we'll be jumping out there, which would be somewhere around a quarter of a percent profit. Nothing particularly dramatic, but just in case it does rally back down to the downside. But certainly a big push last Thursday, which is good. We've retested that area. Buyers have added to their positions. So That's the first area we should start to see sellers challenge that short. And if the buyers rally through that, coming back up into here. Potential targets to the upside, depending on how aggressive you want to be. Anybody got any other pairs I want to look at? I haven't really got much else to cover this morning. Okay, so we pulled back, wick tested. Sellers adding. So let's watch this area here. If we break that low, we've got a good chance of a flush. So the flush is going to be oh, there we go. So the flush is potentially going to be somewhere around about 48 points down to there. So about 50 to 80 pips short, if it goes. Right. No one's got anything else I want to discuss, look at, talk about? Quiet session today. I'm not expecting it to be a big session because we haven't got anything happening. So the fact that we're getting some yen movement kind of says everything, doesn't it? That's Aussies and yens really are the only things moving at the minute. Everything else we shouldn't really see move a lot this week. So it's just a case of sitting around on your hands, waiting for something to happen this week. It's going to be one of those weeks, I think. We had a big week last week. So a lot of the moves that we had last week have all played out this week, which is great. Last week, rather. So anything that we were kind of getting a bit squeezed on, like the Aussies and the Yens, they all completely undid themselves last week. So pretty much flat and got out of everything that was wanting to get out of. You're going to find this in position trading if you're new to position trading. You get big days. You just have to wait, basically. All a waiting game. Market moves when the market moves. We can't control when it does. We can't control when we get paid. Last week was payday. GJ, yeah, still in GJ. Actually, I might as well, I'll run through the positions that I'm in. That's probably something to. I'm just trying to fill the time this morning because there's nothing to talk about. So pound yen still in short. We're in a multi-day accumulation on this. So obviously you can see where the potential is for us to head. But the pound is bullish. We should be seeing upside movement in the pound. So it's, as you can see, with a lot of these yens that have been pulling back, the pound yen hasn't. And the reason is because the pound is so strong at the moment. So we're just seeing this accumulation, but I would expect this to continue moving to the downside. Pound wise, this week, there's GDP on Thursday, but that's it. We've got no news. We've got Bailey speaking today, tomorrow. We've got claimant count, sorry, tomorrow. Might move the market. Doesn't really tend to do a lot. But we've got Bailey speaking today and on Wednesday. Where did I just see him? Yeah, Wednesday. But obviously he spoke yesterday as well. So there's nothing in the news yesterday from Bailey that is impactive. Therefore, unlikely he's going to say anything today that's going to be different to yesterday or tomorrow. So he said stuff. That's pretty much it. So I don't expect to get any movement off that. So with the pound, I think you'll find everything will be waiting around for CPI. So if you get an opportunity to get out of this, I will probably take it. And I will be as well. So you can see my TPs on the pound yen. I've got one here at this low, which is kind of basically where we stopped the rally initially and bounced. Yeah. We came back into that area. We had a new spike. We pushed through it. Then it became support, bounced away. So this area here is a decent support resistance. That's where we bounced from there. So if we break that level, I've got one TP there on an aggressive position, and the rest of it is all down here at these lows. So this is kind of where I suspect we might form a range low, which is, you know, it's a multi-day move. We're not going to get there in one day. But other than that, if you're not in this already, you know, there's no opportunity to get into it now. case of waiting. Mr. Whipsaw. Okay, let's cancel that pending off. Just a whipsaw today. So they bought the lows. You know, I'm gonna leave that sell stop. I'm gonna leave that sell stop in place. We have put a lower high in. Sorry, a lower low in. If this is going to be a lower high, it's obviously very, very tight, but that's the sort of movement we're going to see. If this sell stops out, I'll kind of be done. So the sell's going to stop out on a break of that high, that one. I'll be done. Just a whipsaw. I was going to go through my trades, wasn't I? So yeah, just quickly whizzing through what I'm in at the moment. Aussie dollar CAD, short. Sorry, long, rather. Got a couple of longs on that at the moment. Going back, Aussie dollar CAD, all the way back to this original trade. So I've been in this for quite a few weeks now, but it hasn't gone anywhere. So that was the initial entry. Added to the entry there. Added a third, took that one off. So would be out of this. And I had it out on it on Thursday and Friday as well, and this morning as well, but haven't taken it. So it's just kind of flagging at the moment. Aussie dollar should be weak. Canadian dollar, question mark. So I'm not too worried about it. I'll just add this position back on again down here, bring the average down and get out if we're going to stay in an accumulation down at the lows. There's only 2 positions on it. It's only in 0.4%. CAD Swiss. So buy on that one. First entry on that one was on Friday. So we pushed out, big push down. This was a massive ADR hit. Reversal alert on Asia on Friday morning. Friday, we just did an accumulation. So first entry on that RSI extension. Looking for it to pull back either to there or to there. As I say, I've already covered this one this morning. Swiss yen. Still got the shorts on this from the initial squeeze back here. So we obviously had that continuation, that big, strong, multi-week push against the yen. Japanese came out and said, if you don't stop this, we're going to intervene. Market went, all right, no problem. So we should see this now just start to pull back. Doesn't mean it's not going to continue long. Swiss franc is bullish. Euro is bullish. Yen, obviously, at the moment is incredibly bullish, but the yen will stop at some point. So yeah, shorts on that one. TP, basically for me on the Swiss yen is these highs. Yeah, so we pushed up, bounced, pushed up, accumulated, broke it, support. That should be the next support. Euro CAD, first entry on this one on Friday, short. Again, huge propulsion move, looking for a retest of this high here, this level, or potentially this level. There's a lot of, as you can see, there's a lot of peaks on this. Could be absolutely anywhere we find a bounce point. No idea, but we'll just play it by ear. So with this move, if we're looking at a 50% retracement and a continuation long, which we should see probably on the euro, somewhere around there as well, I'll be looking to get out. But if we get close to that, you know, if we get sort of down to here today and I see it wobble about, just take it off. Euro New Zealand, that's in profit at the moment. So yeah, TP is up there, waiting. Euro US dollar, again, short entry taken on Friday on this. Basically, this was an ADR hit on Friday, and obviously you can see it's just about an RSI hit as well. So just looking for a pullback on that one. I haven't got TP on that. Just stick that at ADR. Basically, this one's a tricky one because Euro US dollar, we've got a potential bullish stance on the euro. The US dollar's stance this week is going to change with the Canadian dollar interest rate and also with the CPI figure. So Wednesday, we're going to get probably something out the Fed at some point after Wednesday to say, right, based on these figures now, this is our new forecast. And the market will obviously re-scorecard itself and we'll get a new stance on the US. But for the moment, I'm sure on the extension, I'm just looking for a pullback just to get out. We're in this range basically. So it's exactly the same play as this. Yeah, as long as this thing's just going to continue to go up and down, just get in and get out when you get extensions. Pound odd, got 2 shorts on that at the moment. Initial entry was there. Again, stuck sideways, multiple week, not gone anywhere. We've had a little bit of a push up. So second entry taken last week. It's pushing up at the moment and pulling back from last week's high. So again, just looking to target somewhere down here, see what price action's like there. No real news on it this week, apart from the GDP figures for the pound. Pound CAD, obviously, that's all going to play out next week. 2 positions on it at break even. Target is in propulsion, basically. So exit there. So assuming that we're going to hit potentially that as a support level somewhere around here, and we're going to continue long, that's what I'd be looking for. Otherwise, all the way down here, if that Canadian, it's impossible to tell what the market's going to make of the Canadian interest rate rise, but typically it would be bullish, which would be pound CAD short. Pound yen we just covered. US dollar Swiss. First entry on that one on Friday. Yeah, massive ADR. It's pulled back into propulsion. They've added at propulsion. So this is a break of this range. So you can see these black lines on the chart are the weekly levels. So that's last week's low and last week's high. So very big expanding range last week. Previous week's highs and lows are in pretty much the same spots down there. So we've been in a range. So this is our first breakout of the range. 80% of breakouts tends to fail and then become mean reversions or range bound opportunities. So that's our first attempt to break out of that level. So at the moment, buyers are buying it back up again. So we'll see where we go. But target on this, I would just go mid-range. I haven't put a target on this one either, have I? Not very good with my targets this morning because these were all taken on Friday and I wasn't paying any attention Friday afternoon. So 125 ADR. So this area here, this little accumulation break, retest to that level. But it could obviously come all the way back up to the highs. It depends how aggressive you want to be. There's no right or wrong. Just go for half of it. More likely to hit that than you are to hit that. But look at this area of support. So after we initially had this move down and we decided we're going to go into a range, yeah, we pushed down, made a new high, pushed back, rejected that level, pushed back through it, came down, tested it again, tested it again, tested it again, broke through it. On the way back up, this has been a very reactive area. So makes logical sense. That accumulation break was breaking through all those zones. So logical place to target. Maybe, maybe not. But that's what I'm going for. And US dollar yen, as I said this morning, not too keen about being long on the yen. So have it on because there was an RSI extension. There was a 5-minute reversal alert. The entry was valid. It was an ADR hit on Friday as well. So there's multiple confluences there to get in long. It has pulled back, but straight into previous resistance. And we've had a very strong reaction by the sellers at resistance. So I'd rather be break even than try and catch a long, i.e. Weakness in the Japanese yen after the yen's been pushing basically 3 to 4 days solidly. You're standing in front of a moving freight train. At some point, it's going to stop, but not sure yet we're there. If you look at the size of the move that we've got to undo, or at least pull back on, this level here, which is 225 ADR, that would make logical sense for a bounce. This does also potentially make logical sense for a bounce. Yeah. But equally, that I don't think is big enough of a pullback based off the strength of that move. So that would be a better place, I think, for us to go long. But we'll see. That's the previous month's high. So that's what I'm in. DAX is just a nightmare today. Not going anywhere. Stuck. Morning, Ian. Catch up on the chat. Burke, is there any difference between regular VPS and Forex VPS companies? Forex VPS companies, there's only two that I know of. The only difference is they set their VPSs up specifically. They configure their VPSs for MT4. So obviously with a computer, there's a multitude of ways that you can configure your servers. So you can configure them for GPU, you can configure them for CPU, you can configure them for RAM. So web servers will have different configurations and software to others. So the Forex VPS guys, when they're setting up their Windows servers, will set them up specifically optimized for MT4, MT5 terminals. But there's not a lot of difference in it, really. The other thing with the VPS provider I use is they automatically turn off auto updates, because you don't want your machine auto updating and rebooting, because if you've got MT4 open, you've made adjustments to it and you haven't saved the profile, you're going to lose it all. So that's the only difference. There's a huge charge difference. No difference in prices between. I mean, a VPS is a VPS. It's a Windows server. If you're seeing a huge price difference, then the difference isn't because it's a Forex VPS. It's because you're choosing a company that's more expensive. It's a VPS. It's a Windows 2012 server. Whether someone charges 50 quid a month or 20 quid a month for a Windows VPS, it's Windows VPS. Just shop around. But I mean, the company that I use, that I've been with them for many years. I've never had a problem with them. VPS Forex traders who I use, but they're not particularly cheap, not particularly expensive. I've done all the shopping around there. I mean, there's two companies. There's these guys who are good. There's another Forex. They weren't specifically a Forex VPS provider. They were just a VPS provider. Can't remember the name of them now, but they're all much of a muchness. Morning, Barrington. Morning, Nafis. View on Euro US dollar. Kind of rejecting at the moment, so I'm short on that at the moment off of the RSI extension on Friday. I think I've just covered this one, haven't I? So yes, double top bounce potentially. Looking for it to pull back down into somewhere mid-range, really. But the entry was Friday. So you could have taken this on an ADR reversal or an H1 RSI extension on Friday. The entry was there. So that was the first M5 reversal alert there. So that's previous day's high. That's where I would get out, ADR. Peter, maybe a silly question. When in a squeeze like Aussie, New Zealand, when it turned around, is the ad done just to stop DD, not to go below your nerves? But if you just add another position as usual, it would play out. I don't really understand the question. So when in a squeeze like the Aussie dollar New Zealand and it turned around, is the ad done just to stop drawdown, not to be like go below your nerves? Doesn't make sense. Oh, you mean aggressive? Right. So you mean aggressive drawdown? Just to stop the drawdown? No, the aggressive drawdown control positions are taken because it's a point where, right. So in a squeeze, well, in a position, price moves against you. right? So if you get the entry wrong, which we all do, you add a position. Yeah. If it keeps getting wrong, you add a position. By the time you're 2 or 3 positions in, you thought it was squeezed here. It's stretched, right? That's why you got in. So the market condition at time of entry was extended. As it gets into multiple positions, it's even more extended. We were expecting it to pull back from there. It hasn't, it's pushed. So we're expecting it to pull back. We're expecting to pull back. If you get to 3 or 4 positions and it hasn't pulled back yet, the market is incredibly extended. You have got way more buyers in the market and they have not taken profit on that move, right? So the snapback is going to be fast and hard. A week, solid, straight down. Yeah. So the reason you take aggressive drawdown control position is because you're getting uncomfortable. Yeah. Aggressive drawdown control is done when you are uncomfortable. When are you uncomfortable? That's the question. Because when you're uncomfortable, when I'm uncomfortable, when someone else in this room is uncomfortable, is a different place. I'm not uncomfortable sitting in 2 to 3% of drawdown on a position. 4% of drawdown, I'm getting uncomfortable. 3%, I'm starting to think about getting aggressive drawdown control positions on. Yeah. That's what you do aggressive drawdown, to get out of the position. Yeah. So the reason I took aggressive drawdown control positions from, I think the first one I took was here. That was the first aggressive drawdown control position. It failed. Another one was taken there. It failed. Another one was taken there. It failed. Another one was taken there and there. They worked. Another one was taken there and there. They worked. Then I was out. Yeah. So you get aggressive when you feel like there's a good chance this is going to turn. So for example, if we have gone parabolic, we've squeezed for 2 weeks. Yeah. And this thing hasn't pulled back at all. Right. And you see a day where it hits ADR. That's where I would get aggressive. Right. If this thing's gone parabolic, squeezed, and they've put an ADR hit in, there are so many people long. The chances of that pullback are exponentially higher. Yeah. So these are this looks like a fantastic opportunity trades. When you take them, it's entirely down to you. There's no rules. You get in when you think you want to get in and get out. There's a whole video on it. I've literally just posted videos about aggressive drawdown control positions on YouTube. Yeah, go and watch that if you haven't watched it. It's about an hour and a bit. Half an hour. Shush me. That's half an hour long. How to survive a squeeze. That, again, it's all to do with aggressive drawdown control. Turn any trade into a losing using aggressive drawdown. As you can see, it's a subject I cover a lot because it's important, massively important. I got asked over the weekend by somebody in Telegram about aggressive drawdown control as well. Would I still do it using a lot multiplier? Yes. If you don't do aggressive drawdown control, you will blow your account. Or you will just sit in 20, 30, 40% of drawdown for a period of time. The whole, you are a trader. You are trading. You can't go, oh, just wait. Yeah. What if it doesn't? Yeah. You need to get out. But there will be points where you will go. So this Aussie New Zealand is a bit of a difficult one because there was no levels. And the same with the yen. There wasn't really levels. So the only 2 things you've got to go on when you're going to look at potentially doing aggressive drawdown control is a previous level in the past. Look left. Again, Bootcamp, there's a slide in there about looking left. Very important. So if you look at any pair, any instrument, yeah, let's say here. There you go. There's one there. Look, there's an aggressive drawdown control position there. There's an aggressive drawdown control position. Out. Added again. Out. Why did I take that aggressive drawdown control position? Look at this big purple line. Yeah. What does price do? react at support resistance. What's that? Resistance. Why did I get aggressive there? Because that is where I was expecting price to pull back on this huge parabolic move that it hadn't done a profit take on. I was early by 3 days. So I took another aggressive drawdown control position and exited the whole thing. Yeah. But if you've got a level to look at, that's where you get aggressive. If you haven't got a level to look at, there's nothing you can do but wait for a condition in the market that looks good. Have we got extended on RSI again? Yes, let's go. Have we got an ADR hit to the upside? Yes, let's go. Have you just seen a huge whacking great shooting star going on the hourly time frame? Yes, let's go. Let's just get in because there is an awesome signal in the market that looks like it might be the case. And don't forget, all an aggressive drawdown control position is a trade, like any other trade. You're using a stop loss. Yeah. So it's just a normal trade with a stop loss. So it's forget the position that you're in. Take that out of the equation. You've seen a lovely, great shooting star at an area of resistance, or there's been a reversal alert on the 15-minute time frame that's put a perfect 10 pattern in. It's pushed down, it's retested, you got the retest arrow, and it's dropped. All looks absolutely fantastic. Hit the button, stop above the high. It's just a normal trade you would have taken before you became a position trader, except you're taking it with a risk of 0.5% to 1%. Everything else we're taking is tiny risk. These ones are bigger risk because we are getting in aggressive. Yeah, trying to get out of the position. And the only reason we're at a point where we need to do aggressive drawdown control is because this thing's gone so far parabolic, it's got to snap. Yeah. Profit take. We're waiting for the banks. Don't forget, the reason position trading works is because we are trading the same way as the banks do. The banks have to take profit. If the banks don't take profit, they don't make money. So that's why the market cannot go on in one direction forever. This is why we have market structure. Market structure exists because of profit-taking maneuvers by the banks. The banks push in one direction, they squeeze the market, and then they take profit. They squeeze it again, then they take profit. They squeeze it again, then they take profit. Push, pull, push, pull. That's what is happening. So if you're in a position where you've been in 4 or 5 positions, it's got massively extended. It's gone way further than you ever anticipated it to. And you hit a propulsion gap and you see a bearish price action move like a reverse alert on M15 or M5, get in and assume that this propulsion gap where they started that move is where they're going to add. And as soon as they add, that takes profit on that and everybody else will jump in with them. So it's the same. That's what aggressive drawdown control is. But the only thing you've really got to go on if you've got no support resistance to the left is your P&L. This is why the Trade Manager dashboard is there. You're only interested in stuff that's in problems. There's nothing at all concerning on that P&L whatsoever. If there was something sitting at 4%, I'd be watching it like a hawk. Literally, monitor. It's on my monitor all the time. I'm watching it. I'm waiting for the market to look like it's going to put a move in, and I'm on it with a big position. And it's just got stop loss, the same as every other position has before you became a position trader. Does that make sense? That answers the question. Not a silly question, but it is detailed covered in those 3 videos and obviously in the bootcamp. But those 3 videos obviously are additionals I've done because it is something that people ask about a lot. It's the get out of jail trade. Yeah, you're wrong. You're totally wrong on it. That trade that you thought was good, and then you thought that's a good place. Those 2 weren't quite right, but this one's definitely it. Those were all wrong. You're like, right, we've got to do something about this. And that's going to be 1 out of 10 trades. The rest of them are all just going to basically go green and just get automatically put over there. Worried ones we're dealing with. Tight. Just curious, are there any huge differences between Aussie pound and pound odd? Well, you can't trade Aussie pound for a start. I mean, you might be able to trade Aussie pound, but I mean, I don't know any brokers that do allow you to trade Aussie pound. It's not across. US dollar CAD. I think I've covered that. Or have I? No, I don't think I have. So US dollar CAD. I mean, it's at a decent area of resistance, support resistance at the moment. I mean, you're bang. We've just put in a high there. We've got a low there. You're bang in the middle. This thing isn't going to move until Wednesday. Like start a sustained move. I mean, you might have it obviously pop down to ADR, pop up again, and it'll move obviously. But I wouldn't expect you to make a run for a support resistance level until Wednesday. So right now, probably looks like a good long. Up to there. But equally, obviously, it could come down, and the next move could be to come down and retest the lows. But it's just not. For me, it's not extended in any way, shape, or form, so it's not even on the radar. Can I take a short entry in Euro US dollar? Yeah. So if you open up this button and hit that one, that will go short. So I'm trying to keep a straight face. Euro US dollar. Can I take a short entry in Euro US dollar? If you want to. I can't really answer that question, can I? Yes, you can. I don't know what your system or strategy is. My system told me to get in on Friday. I'm in. DAX. Oh, forgive me. Don't make me look at the DAX. Hopefully it's going short. Okay, so we're just holding out the highs at the minute. Gap fill's not done. I've been whipped to death today. So that was your long play today. Potential short opportunity here. So we got wicks to the upside, rejecting the high put in at the open. So good play today would be a sell stop underneath those lows. So I would probably actually go with a high of this candle. Last candle now, because it's just changed. If it breaks out to the upside, all you're going to do, if you break out to the upside, you've got potential of just running up into the gap fill and then getting a rejection at the gap fill. So there's not enough risk reward really there to go long. To go short, there is a lot more. So I'd be much more interested in trying to short it from here, because you'll have room for the price to push back down into these propulsion gaps if it needs to get this thing to break even. But it could well run on those lows. Obviously, I think we're probably going to go for the gap fill, but this is just too choppy today to really get a trade on, really. That looks good short. Potential, if it goes. So if you can stand big drawdown, you can just add another position then. Well, yeah, I mean, in theory, yes, of course you could, but that's just gambling, isn't it? Really. Go and test. Right, you can test all of this, Peter. If you go and get the market reversal alert CA, stick it on your chart and put a lot multiplier on it if you want to, 1.3, and just set it running for 2 years. See if it blew the account on a currency. If it didn't blow the account, yeah, you could just literally let it go. You will have a big drawdown at some point. I don't know the answer to that question. I wouldn't risk it. you know, if you can stand big drawdown, yeah, I mean, there's lots of EAs out there you can buy and lots of signal services you can buy that have got 30, 50, 60% drawdown on them. And they're all using usually grid strategies. So, yeah, I mean, those, they will work for a period of time, but then they won't work. There's loads of martingale ones. There's an EA out I was looking at the weekend. I was looking into it in a bit of detail called Grid Rescue. And it's basically an EA that somebody's built that is kind of, if you've got an EA or a trade that's gone wrong, stick the Grid Rescue on there and it'll get you out of it by using martingale and grid trading, the two things that blow your account regularly. But forget all that for a minute. This thing will save your life. No, it won't. If you leave that and test, and I've done testing with this EA, it blows all the time. But it will get you out all the time when the market conditions are right. So it's like anything. The market cannot go up forever because the market has to pull back. They have to have the opposing force to be able to take profit. So at some point, if it's gone parabolic, there's two things that can happen. It can go sideways and then go parabolic again, or it can pull back. If it does that 3 times in the row, yeah, so it goes parabolic, 4 ADR, accumulates or flags, doesn't give you a chance to get out, and then it goes parabolic 2 ADR, 3 ADR, and then it goes sideways, or it does another flag and then goes parabolic again. On those situations, on that one currency, you may be in 15, 20% drawdown. And this is where exposure comes into it. If you are exposed 3 times on that currency, you will experience 3 times the pain. And if you were 25% in drawdown, you are 75% in drawdown on that one currency. Yeah. If you happen to have something else squeeze at the same time, pop. This is the thing. Yeah, I can't give you an answer to any of these questions because I can tell you to go and back test and you can look at what's happened in the past. That's got absolutely nothing to do with this week, this month, this year. We are totally different to the past. The past has happened. The future is completely, I have no idea what's going to happen with interest rates, inflation, world events. You can't risk being in 25. So let's say, for example, right, you let something go crazy. So let's look at the Aussie dollar, New Zealand dollar as an example. This would be a good example to use. Okay. So you are here right now. This thing's gone nuts. You're sitting in 7.5% of drawdown. There. Ask yourself the question, if this thing does that again now, first of all, this 7.5% will be exponentially worse, and you will be adding more to it, and it will also be going into drawdown. So if that move happens again for another 2 weeks, i.e. it pushes up 2 more weekly bull candles like that, you might be sitting in 30% of drawdown. You just have to ask yourself at this point, am I comfortable with that? If not, you're going to need to scale out of some of it. Take some losses. Yeah, there's loads of losses in here. I ended up minus 1% on the entire trade. But at that point there's nothing to stop this going that way, because what could happen? We had the New Zealand dollar rates come out as expected. The market had a massive negative reaction for some reason to that. Normally it wouldn't. Then we had the Australian rates come out positive, and the market had a positive reaction to that, which you would expect. Then we sat sideways for a few weeks waiting for something to happen. At that point there, the New Zealand dollar rates could have been announced, and those New Zealand dollar rates could have dropped by 0.25%. If that was the case, this would have gone parabolic for weeks. By the time you get into a multi-week squeeze, you have the danger of the news that caused that squeeze reoccurring and going against you again. That happens 3 times in a row. You just won't survive. So you've got to do something about it. Yeah. And this is what keeps you on your toes. But you can't ever say, what should I do here? You have to do what you feel is right. And you won't know what that is until you get there. But go and look at history. I mean, look at where I got out with that. I Imagine if I hadn't got out with that. 40% maybe profit I could have made. But I didn't, because I needed to be out. Because my job is to manage risk. And the risk of holding that and potentially losing it all and going into drawdown for 2 weeks is too big. Then yes, I could have gambled and made 40% on the account. It's not going to happen, is it? You're not going to do that. You're going to get out when you have an opportunity to get out. I got out with a lovely profit. And you will always find as well, the squeeze plays are the ones you make the most money on. Yeah, all these trades that you get into, like the Euro New Zealand, where you get in with one entry and then you get the perfect entry, the reversal alert triggers, you're in, it retests, it comes down, you see a previous area of resistance, and you go, right, when it gets down to there, it's possibly going to bounce, I'll take it off, and that's going to make me $400. Yeah, these ones, you're never going to make more than 0.25% to 0.5% out of most of the time, because it's one in, one out, tiny risk. The ones where you've been squeezed for 3 to 4 weeks at a time, you've got big lot size on. Yeah. So when these moves start, the increments that your DD goes down by and your profit goes up by are exponentially enlarged, aren't they? So by the time this got from there to there, that was minus 7% or something ridiculous. That was plus 11. Well, it wasn't. I didn't make plus 11. It was plus 6 or something, because we banked a load of different instruments all banked on the same day. And you'll find that also happens all the time, because the market moves in waves. When one thing moves, everything moves, because the market moves on fundamentals. So we're waiting for a news event to kick in to move the market. The market as a whole, every currency moves. So if something affects the US dollar and makes the US dollar rally, everything else will rally either with it or against it, because to be able to make the US dollar rally, we have to have finances put into the US dollar. Where do they come from? All the other currencies. So everything comes out, the CAD, the pound, the euro, to be put into the US dollar. So they all move at the same time, which is why you find you have these massive days and massive weeks, because everything moves at the same time. People say all the time in Telegram and in here, why is it I seem to spend my entire life in drawdown with it gradually going against me? And it seems to take forever for my drawdown to grow to a horrible level, and then everything happens at once. That's exactly what happens, why it happens. Because you've got into everything wrong at the same time. But there's nothing you can do about that. That's what position trading is about. It's about removing the element of loss and waiting for the market movement to pay you. That pays you. You can't force it. So it's all a waiting game, which is why a lot of people don't like it as a style of trading. But that's why it works. Yeah. Because everybody wants the Lamborghini money. I want to make money today. How much money do I need to make today? I need to pay the bills today. I need to do this today. I need to do that today. That's fine. Go and get a job. Jobs are things that pay you regularly every month, every week. So you get a packet of money, you put it into your bank, and you pay your bills. If you want to be in control of your finances and earn an unlimited amount of money, you can't go and get a job. You have to earn money this way. And this is what controls your finances, the markets. The markets move up and down. They decide when you get paid, not you. Because they will move in your direction when they are ready. Your job is to wait for them to move in your direction, because you can't time it. Obviously, if we could time it, we would just use a stop loss, but we can't. So you just got to have that sort of level of patience. That's it. That's position trading in a nutshell, really. Good question, Peter. Minpo, I stopped trading and focus on the bootcamp. Back to class. Cool. Check Euro US dollar. Already done that, I'm sure. How would you adjust the ORB set file if you would use it on your own funds instead of prop? I wouldn't adjust it. It's a stop loss strategy. So same. I like the way you compare. How would I use it if it was my own funds instead of prop? Prop is my own funds. I have paid for the funds here, yeah? So in a prop account, I have paid 500 to $2,000 to get this prop account. I've paid evaluation money to get this account. This is my money. Yeah, they've given me £136,000 in this case because I paid them this amount of money to get that. This is my money. How do you see it's different? You've got a £2,000 trading account. Why not split it into 4 and buy 4 proper valuations? It's the same thing. You're just going to get potentially hold of 400 grand instead of 2 grand. It's your money. You're looking at it in the wrong way. And also, if I'm using my own money, I want to stop out if it's wrong because I'm risking high amounts of money. Anybody that's risking 0.5% to 1% per trade is risking a huge amount of money. There is no bank or institution on this planet that risks anywhere near 0.5% to 1% on a trade. None. Can you imagine if you're sitting in Barclays Bank, you've got 200 million in trading funds available on the commercial trading desk, and you put 200,000 of it on a 5-minute candle movement? You're sacked immediately. So if I was trading my own funds of this and I did want to change it, I would just make my stop 4 times larger and play multi-day, but then I wouldn't do it in OLB. Yeah. A scalping strategy is incredibly high risk and incredibly high reward, which is why everybody in prop is trading 5-minute charts and why the ORB strategy is so good when it works. When it doesn't work, it kills you. I lost 3% this morning. Yeah. Last week, I made 7.5% in one session. It's gambling. It's high risk. Scalping is basically you are putting a huge amount of money on the line on a flip of a coin. This candle right now, where's it going to go? Is it going to close bullish or bearish? Right now, it looks like it's going to close bullish, doesn't it? We've got 55 seconds left on this candle. So do you go long now or short? Heads long, tails short. Long. When this candle closes, we hit the buy button. What's our odds of being right? Exactly the same as if we'd have hit the sell button. Because that candle being bullish and green now means absolutely nothing. The next candle is going to be totally different. And where do you put your stop loss? How big is the next candle going to be? Is it going to be that big? Or is it going to be that big? So where do you put your stop loss? No idea. No clue. You're gambling. So if you're going to put 0.5% to 1% on a complete coin flip with a stop loss in a position which is completely random and may or may not get hit, how would you change it? What is there to change? It's just random chance. You're just trading random chance. So right now, is it a buy or a sell? There's a huge propulsion gap here. I would sell it because I think they're going to come back and test this area right now. But, you know, what would you change? I wouldn't change anything because that is what it is. It's a gambling strategy. It's a high risk, high reward strategy with a long-term edge. But there's nothing to change on my own funds because it's that type of strategy. If I'm going to trade my own funds, and as I do, I position trade it because I can't get it right because I haven't got a crystal ball. Make sense? How would you change? Let me flip the question around. So how would you adjust the ORB set file on your own funds? What's your thoughts? Why are you asking that question, DW? Why do you think it needs changing? And what could you change? I mean, for me, having a wider stop loss is proving much better, much less stressful, and much easier to control drawdown, but only easier to control drawdown if you're watching the charts. So today, right, that's it, I'm done. We've made a loss today. Yeah, both breakouts failed. Nothing I can do. It's a loss. But what you could do now is you could get in again. So you could go short now. You could go, let's go short here. Because I think it's going to pop down into there. Yeah. If that now goes like that and like that and stops me out, I've now lost 4% of my account. So I've got 1% to play with on prop. What you change in your set file will determine how many more trades you're going to take today based on what happens initially. So if you doubled the size of your stop losses, you would get hedged twice as much and your trades would take an awful lot longer to play out. That's what would happen. I don't know, backtest it. Difficult question to answer because I don't think there is an answer to that question. Gap fill's done anyway. So there we are. Just happened to go whipsaw, chop. And that was your entry today. You know, this proves my point today, doesn't it? If I knew the gap fill was going to be done by a double bottom bounce off of the exchange open today, I would have taken it. I couldn't see the future. When that 5-minute candle opened there, I could not see what was going to happen next. So the only way you make money scalping is by taking a trade with an idea that you know has a long-term edge and using a positive risk-reward ratio to hope that the edge you have plays out in this particular instance. That's what every trading strategy is. It's an edge that you have seen play out multiple times in the past. If you apply a positive risk reward to it, pays you an amount of money. When it works is entirely down to the market. The opening range breakout EA has a lovely long-term edge. It also has weeks where it doesn't make money because the edge is removed by the market whipsawing. There's nothing you can change in a set file to stop that happening. So if I put this onto a prop account or I put it onto my account, the result is going to be the same. The edge will either play out or it won't play out based on the market movement on every candlestick. I can't control that. Can't control it. So how can I possibly change the set file to make anything better or worse? Because the odds are still the same when I enter a trade. It's either going to work or it's not. Still pushing up on the DAX. For the ORB backtesting, would you rather use MT4 or MT5? I always use MT4. I don't use MT5 at all. Can't bear it. I just can't bear MT5. It's too slow. I can't control the data. One of my main stipulations whenever I'm testing anything on any platform or with trading, with any strategy, the only way you can be 100% committed to a system or a strategy is if you fully understand the system or the strategy and how it was produced. If I cannot control the data that I'm backtesting on, how can I have faith that that data is correct? So if I spend 6 months developing a system or a strategy on data that I have no idea if it's accurate or not, where do you think my faith levels in a system or strategy are? In MT4, I can download tick data and manipulate that tick data to match the exact broker timeframes that I'm trading on and know that it's accurate. MT5, I've no idea where that data comes from. And I have no idea how accurate it is. And I can't control it. MT4, I can control it. I can download tick data from any broker that I deem fit on any time frame, and I can adjust the GMT offset to match my exact broker data. So I know that every candlestick painted here was painted by my broker pretty much to the pip. If you're going to backtest and develop a strategy, you've got to have 100% faith in the data, because if the data is different by that much of a spread, your results are going to be different by that much. So MT5 just doesn't allow you to do that. It allows you to do a lot of other stuff, which is absolutely awesome. But I will do a backtest in here on the ORB EA, for example, and then do the same backtest on MT5 and get a different result. Why? Because the data's different. Strategy's the same, the execution's the same, logic's the same, the data's different, you're going to get a different result. Which is why backtesting has no relevance on future performance. It tells you what metrics are good and bad to use. It tells me that the 15-minute opening ranges and the 5-minute opening ranges have different results, and I can replicate something similar on other data sets. But the accuracy of that is never going to be the same moving forward, because the data moving forward is never going to be the same as what was in the past. But it tells me that I shouldn't be using a 50% of the opening range stop. It tells me that I should be using something over 100%. That's as accurate as I can get with any backtesting. Don't use something too tight, use something loose. All right, I'll use something fairly loose, which is why all my system parameter permutation tests start from 110 outwards with a stop loss, 110% of the range, because I know from backtesting that anything under that has a lower strike rate. But which one, whether you should use 110, 120, 130, 140, they all work, all of them, but only when the market conditions allow, which we can't control, obviously. So, Peter, thank you. I'm just completely reprogramming myself. Yes, it's a big reprogram. Position. It's an incredibly difficult transition to make from what you've been taught for years, what you've been taught for your entire life as a trader, since you ever became interested in trading and saw your first chart. You've been taught to find a system or strategy that has a positive R and trade it. You've been told to put an order in the marketplace that is going to guarantee to lose you money, but you have never been told that. You just blindly go, well, if I put one of those in, I've got to have one of those and one of those. You've never been told why. Why do you have to have an order to lose you money? That's what everybody needs to question. Why do I need to place an order that makes me a negative return on my account? Well, to stop black swan events. I've had one in 15 years, one black swan. I've experienced one black swan event in 15 years trading. And if I had a stop in place, I had a stop in place on that black swan. It didn't get honored. Why? Because there's no liquidity. So forget that. Black swan, that's not the reason. What's the reason? Everybody teaches you to do that because it limits your risk. Why? Because they're telling you to over leverage. Everybody tells you to take 1% to 2% risk per trade. If they're a sensible person, they might say take 0.5% risk per trade. That's too much. 5 trades. If you try a new strategy, with a 1% risk, and you happen to run into a losing run of 5 losers in a row, you've lost 5% of your capital. 5%. Can you imagine what would happen if the price of your house went down by 5%? That'd be 35 grand, 40 grand, 50 grand. I don't know, whatever your house is worth. Yeah. Something going down by 5% that's a lot. If it goes down by another 5%, you've lost 10%. If it goes down by 10%, you're panicking. Yeah. But the reason you're told to do that is because you're told to use a strategy that massively over leverages your account to gamble. That mindset, getting out of that mindset of, I'm not trying to get a trade that is going to work. I'm trying to get money. That's your job, is to generate alpha, produce a positive return on your investment. It's not to put an order in the market to lose you money. When things go against you, your mindset has got to be completely different. That's the thing. It's changing the mindset. That's the hardest part. And you can't do it until you've done it. So that's why I say in the bootcamp, give it a month. You've got to give position trading a month. You've got to experience a trade that went 3 or 4 positions against you and then came back and made you a profit. Because you've got to get that, I get it. Yeah, when you get in, if somebody starts position trading and they get a load of trades like this Euro New Zealand, where they get in and it goes down and they get out, and then they get in and it goes up and they get out. They get in, they go down and they get out. They're like, well, that's brilliant. But if I'd have quadrupled the risk, I'd have made more money. Yeah. What you need to experience is you get in, it pushes against you, it goes like that, and it goes up, and you get in again. Yeah. And then it goes down and you get out. And then you go, get it. I understand. All we're doing is, because we don't know where the position is going to work from, we just move our entry to another position and then we wait for it. And if it works there, we move it again. So our job is not to time our entries into the market because the banks do that. Our job is to make sure that we have an entry that can make us profit when the banks move the market, not the other way around. We're not looking for the system that can predict the random event. We're looking for a way to extract money when the random events occur. mindset shift. Totally different way of looking at it. Was just wondering if having no daily drawdown rule would change something. Yeah, no. Having no daily drawdown rule doesn't make any difference, does it? The only reason you need a daily drawdown rule is if you're over leveraging your account. Think about what the daily drawdown rule is. 5%. You cannot lose 5% of your account in a day. What have I just been saying? There is no sensible trader on this planet that risks 1% of their account on a trade, yeah, and makes money consistently. Because the markets know that, or the prop firms know that you are going to have a losing streak in your strategy. The best strategies in the world are going to lose regularly. And when that losing streak happens, that's what it's designed to do. Everybody is trading the 5-minute chart. To make money on the 5-minute chart, you have to get in with some serious size. And you have to be very lucky. Yeah. So it's all geared around that. If I was going to change anything, I would basically go to position trading and reduce my risk, but they won't let me do that. Well, you can, but I mean that's what I do, but I don't do it on indices. So the ORBEA is the wrong question to ask, I guess. What would I change if I didn't have daily drawdown? I would position trade because that's consistently profitable. But I'm not going to make the same amount of money. This is what I was saying the other day. I'm on the search for a prop firm that does not have a daily drawdown. The prop firm that comes up with the no daily drawdown and only a total drawdown is the one that I'm going to jump on very quick. There's one that's kind of sort of there, but if you read the small print, when you get the funding account, the daily drawdown comes back in. So there's no point in me passing an evaluation on one set of rules and then be given a totally different set of rules to trade with on a live account. It's like, well, hang on a minute. My strategy now doesn't work, but you're not going to tell me that until you fund me? Off you go, basically. Harry, morning. Any idea what gold will do today? Hang on a minute. We haven't gone through our John Wicks for ages, have we? Right, let's have a look at gold. Don't know. Not a lot. I'm just watching DAX for a short entry, so I'm just. We've got an inside bar forming on DAX. Got 10 seconds to go on this candle. So we've got inside bar. So market's paused. So we're looking for a continuation or a reversal here. And obviously we've got the gap fill done. So just pushing back up into this inside bar. There's no volume. You can see how slow this market is. There's no volume left. So any trades you're taking now basically are, the market's likely to do stuff like that. So anything you take is high risk, very high risk. I just got slipped into that. Look at that slippage. So looking for a short, watching this propulsion gap fill here. Can't see it on here because I haven't got the indicator on, but this propulsion gap fill. Yeah, so risk is that. It's 2R. That's a trade worth taking, only down to there. Gold, sorry. It's sideways at the minute. So overall gold, we're stuck in a range. We've been stuck in two ranges on gold, basically because the US dollar is stuck. This is a US dollar cross. It's just the US dollar basically. So you might as well trade the Dixie, to be honest. It's less volatile and moves nicer. But we got stuck in that range. We had a little price discovery at the lows. We managed to retest the highs twice and then we held. So that's now your new range low. So we're stuck here. Obviously, Wednesday is when this is going to move, when we get the CPI figures. So until then, there's nothing to move it. So I would look for range high bounces to the downside. So wait to come up and retest last week's high or retest last week's low. But you can see, yeah, this is ADR high and ADR low. Look at where we range high and range lows are. Pretty much ADR. So just literally sit and wait for an ADR hit and short the ADR high and buy the ADR low until Wednesday. Wednesday, depending on what happens with CPI, it's going to go up or down. So if we get positive CPI on Wednesday, it'll come down. If we get negative CPI on Wednesday, it will go up. I don't know. Difficult. Where it will go today, I don't know, Harry. It's impossible to predict intraday movement. I'm really struggling to keep my DD percentage down, and I'm continuing to get in margin called. You need more leverage, Tom. So if you're getting margin called, you're probably using 50 to 1 leverage or something like that, or lower. That'll be why you need to reduce your risk or get an account with higher leverage. You need decent leverage, 200 to 1 plus, if you're going to position trade. I'm going to get stopped out on that, I think. Stopped out and slipped. Very, very high risk trade this. There's no liquidity in the market. So the spreads are going to be jumping around. And obviously it's very, very slow. But I think there is a good probability of a pullback and retest if we are going to go for that gap fill up. There's also a possibility this is going to be a rotation day and we're going to come all the way down. You can get an overall drawdown with an accelerated account on my Forex run on funds. Yeah. But yeah. But you know, there's no point in buying an accelerated account. If I'm going to do that, I might as well just use my own money and up my leverage. Yeah. So it's just because to get an accelerated account on my Forex funds, you're going to be spending $2,000 plus. Yeah, or 1,000. So basically what you're doing is you're spending 1,000 to get 20 to 1 leverage, but having a restriction of 5% put on it. Pointless, isn't it? I might as well just put the 970 in and go in with 2% risk per trade. These are pointless, these accounts, these accelerated ones. Basically, you're paying $2,500 to have a go at trading with a 50K account. Forex, your risk, it's the same thing. The chances of you losing it are very high. Because there's a rule that means, you know, this rule is there because they know you will have a losing streak. When I'm trading with my $2,500 with 2x the risk, and I get 5 losing trades in the trot, I've lost 10% of my account. But I have an opportunity to get that back because I've only lost 2,450 of it. With a prop firm account, I've lost 2,450. I've lost 100%. When I go into 5% of drawdown, I've lost 100%. If I go into 5% of drawdown on my own funds, I've lost 5% of my own funds. These are These accounts, and you go 10% if you want to go emphatic, but then you're going to be spending $2,000 to $5,000. So basically, you're paying for 10x leverage. Your broker gives you more than that. So these are for people that think they've got the perfect strategy, but it hasn't quite worked in evaluation. I've just about missed it. I tell you what I'll do. I'm so confident in it. All websites that sell stuff have a product, and then they have a bigger product, and then they have this gargantuan product. So it's like, I'm selling you a course for $199, and it's really, really good. And if you want my personal group, you can spend $600, and I will do the course, and I'll spend one-on-one time with you, give you my signals, and give you access to this. If you really want to learn how to trade, pay me $5,000 and you'll get one-to-one with me twice a week. They'll sell one of them a month, maybe. One every other month, maybe. But for $5,000, what you're actually paying $5,000 for is stupidity. Honestly, you're not going to get any more talking to somebody one-on-one than you would in a group that they're already in. I could charge you $500 to have a one-on-one session with me for 4 hours, or you could just come in the live room and just ask me questions. That's basically what you pay for. What you're paying for here is, I think I've got a really good strategy and I just need to get hold of 50K. If I can get hold of 50K, it's going to work. Why is it not going to work on a demo account? Why is it going to work on a 50K funded account and it won't work on a demo account? These are just silly. Just silly. Don't do it. Stopped out. Or not quite. Will be stopped out. That's done for the day, that account. Can't touch that anymore because I will hit my drawdown limit. See? I'm restricted. But do I want, if I was trading on my own account, I wouldn't have done that on my own account. But if I was doing that on my own account, I need to stop because it's all wrong today. You've got to stop. That's what those limits, they tell you they're there to encourage good trading behavior. They are there to encourage good trading behavior, but there's other reasons, obviously. Tom, I'm using a 30-to-1 10K account. Yeah, that's nowhere near enough. I read somewhere Australia was capped at 30-to-1. Go overseas. So if you want to get more leverage, yeah, I mean, I'm in the UK. We're capped to 30-to-1 as well. Go to Forex or Axie. They are not. They will move you to Cyprus or the Seychelles or somewhere else that they are not regulated to 30-to-1 leverage, but you lose the regulation. So a 30-to-1 leverage account will buy you negative balance protection, for example. But if you're using a 0.1% risk, you don't need negative balance protection because you're never going to get anywhere near a margin call. You only need negative balance protection if you're taking a 2% risk trade and you get a black swan event or something crazy happens where something moves 400 ADR and you forgot to put a stop loss. You need negative balance. If you're using a 0.1 or 0.25% risk and you get something move 400% ADR against you, you might be in 2 or 3% of drawdown. You've got to be able to get that leverage on. So did I stop out on that? No, survived, look. But doesn't look good. Can you use a 30-to-1 leverage on the ORB? Yeah, ORB, the opening range breakout is a breakout strategy with risk reward using a stop loss. You can use a 10-to-1 leverage, yeah, with the ORB EA because it only takes one trade at a time. The only reason you need more leverage is because you're taking multiple positions when you're position trading, and you're holding them for a longer period of time in some cases, obviously, depending on what the market does. With the ORB EA, you're in and out in half an hour. Or a few hours max, aren't you? So you're only taking one trade. Stopped out now. But yeah, it doesn't matter. It doesn't make any difference what leverage you have. You can use absolutely any leverage with it. And obviously your risk is dependent on the size of the opening range, but the amount of money you risk on your trade will determine the lot size. So in some cases, a 30-to-1 leverage, you might find that it can't get the lot size on because you are taking a very high lot trade. But what I would say is, with everything you do whatever account you're going to trade, use the strategy tester with the conditions that you are using. So put your initial deposit in, on your account, and it will just basically trade the leverage that you've got. I think if you use this, I think you can change margin, So you can set up margin rules in there. And you'll find that sometimes it just won't take certain trades, but the more the better. But 30-to-1 is bog standard now, pretty much worldwide, unless you go overseas. But all these brokers have got overseas, So like with Axie, this rule. So I've gone to axie.com/UK where they have to put this. If you go to, and that's the languages. Not sure how you get to their international site. If I can just put USA in. No. But there are other versions of their websites that they all have, where you can get to different leverages, basically. Just got to do your due diligence. So Axie, when the rules changed, they approached me and said, we are going to have to switch you over to being a professional customer because we have to move you over to XYZ to get the leverage, or we can drop your leverage. So I said, I'm not dropping my leverage. If I'm going to have to drop my leverage, I'm going to have to go elsewhere. So they bent the rules and moved hell and high water to move me into an environment that I could trade with the leverage that I want. Don't forget, your broker, to your broker, you are an incredibly valuable commodity. Every time you press that button, they earn money out of you. They want your business. They will help you to trade under the conditions that you want to trade. You have to speak to someone. The websites won't let you do it. You can't sign up on Axie's website and get massive leverage. But you can pick up the phone and go, I need more leverage. And they'll go, how about moving to the Seychelles? Or whatever. There's always ways and means around it. But there's always a negative. And never put all your money in your broker either. Put most of it in there. If you've got 200-to-1 leverage, you don't need to put your entire trading balance in there because you've got the leverage there. So if something does go wrong, you can lose a portion. If it was to go wrong, I mean, it's just so unlikely. Look at we had the war break out in Ukraine. And, stuff moves, like oil went nuts when the Ukraine war kicked in, It moved, what's the ADR on this? 19. So, I mean, in that week, it moved 337. So if you were position trading on this, yes, you were short in there, which is why I don't position trade oil. But if you were short in there, that was painful. But it wasn't catastrophic. This is what people class as a black swan event. But look what happened after it. This is what normally happens after a black swan event. The US dollar Swiss, when the Swiss franc cap was removed, we went down like that on the US dollar Swiss. What did we do straight after it? We came all the way back up. You won't survive that with 1% risk on a trade. It's not going to happen. So just don't worry too much about negative balance protection. Unless you're going to be trading with silly risk, then yes, you need it. And in that case, you're going to be using a stop loss. Are you on the Pro Plus with Take Profit Rate Trader? Are you on the Pro Plus? The Pro Plus? Axie Trader Limited, is it the other website? Oh yeah, well that's the UK version. Am I on the Pro Plus? What's the Pro Plus? Pro Plus. I can't even say it. Pro Plus. Take Profit Trader. As far as I'm aware, there isn't options on Take Profit Trader. The only option you've got is your account size. Pro Plus account. I don't know what that is. I've never been offered anything on Take Profit Trader. I don't know what that is. My free account is waiting. No, it's not. That's a lie. Right, that's all I've got for you today. So DAX ORB today was a blowout, so nothing much we can do about that one today. Everything else is just sort of flip-flopping around. So profit-taking potential today basically is very limited because the market's not going to go anywhere ahead of Wednesday. The Aussies obviously have moved a bit. So we've got a drop on the Aussie happening. So there is potential for longs there. Reversal alerts for mean reversion plays on these. Pretty much the same as we've had for the last few days. So those are your opportunities. Drop down M5, wait for the reversal alerts to get in. Pretty much exactly where that entry is will be a reversal alert. Apart from that, there's nothing else really. So just bear in mind, we are waiting for Wednesday. So today's news is Bailey later on. Tomorrow, we've got nothing but the claimant counts, which don't tend to really do anything. So we are just waiting for Wednesday. And Wednesday is the three of the biggest news events you can possibly get. New Zealand rates, inflation figures for the US, and the overnight or the CAD rate. So it's all going to kick off on Wednesday. But until then, I think you are looking for high-low bounces. And I don't think you're probably going to find you're going to get any RSI extensions much. So these are the days when you want to drop down to those low time frames and just literally wait for those reversal alerts at support resistance levels. So, you know, just scan through every day and think, right, here, for example, Aussie dollar Swiss. We're down at support at the moment. See if we're going to get a bounce. Yeah, we've got a monthly level coming up. It's not even a good monthly level, is it? But we've got that monthly level coming up at ADR. Take something like that. 150 ADR, if it was to possibly get down there. There's a beautiful support coming up. There's a bit of a support there. Yeah, there's three lovely levels there. But yeah, these are the sorts of trades you have to hold as well for multiple days because it doesn't go anywhere of any speed. So we will see what happens this afternoon. So I'll be back this afternoon at 2:20, same time for the US session. We'll see how we get on with the US session. See if we get any movement there. Keep your eyes peeled on the financial juice calendar. As I say, there's no news forecast today, but obviously anything that is going to move the market is going to be unexpected news. So we're just waiting for stuff to happen. Pro Plus account is where they move you once you hit certain profit. That'll be on a funded account, I take it. Yeah. So so that's probably a scaled account, is it, or something? I don't know. You got to get funded first. So I'm not funded with them. So I don't know. I don't know much about what happens when you get funded because I haven't got funded with Take Profit Trader before. So they are the best conditions, though, by far, payment-wise. I've got FTMO at the moment because they're cheap. cheap deal on, but they are the best, by far the best. No, I have been funded with them. Sorry, what am I talking about? I haven't scaled with them. So as far as I'm aware, it's just a one account until I haven't even looked into. I never look into scaling. So if that's a part of the scaling, I wouldn't even know what it is because I don't get scaled. You just basically withdraw the money and then blow the account. Upgrade to Pro. Oh, there you go. Right. Okay. $50 executions rule no longer apply. Is this something new? I don't even know what this is. I've never looked at it. You'll enjoy unparalleled benefits. You can say goodbye to the daily loss limit. The 50 executions rule will no longer apply. I need to read into this. They move you once you hit certain profit. Yeah, I'll have to read up what that is. Okay. Right, yeah, okay. I mean, so the first thing you got to do with this is hit $5,000 in profit. Yeah. I assume you've got to leave that there, have you? Because I always withdraw. Whenever you get, the whole purpose of prop is to make a load of cash fast and withdraw it. That's basically how prop works. So that is, as far as I can see, a scaling plan, isn't it? In the current account, credit account. So if you will have less than 5,000 of profit in your account by the time it's ready, you will not get access to the pro account. Anything above 5K can be withdrawn. Yeah. So basically what this is, so it's what they're saying is, if you get to 5K, right, well done. You can't have that, but we can sign you up to something else, and then hopefully you can hold your account a little bit longer and get slightly more. No, thank you. I'll take my money. I'm trading a high-risk strategy that has a high probability of losing at some point. I do not want to leave the money there. I want to take it out. So I didn't even know about this. Not seen it. No daily loss limit. But you get such a small loss limit with futures anyway. You know, I don't know. I don't see the point in this. I don't see how this is beneficial. Apart from the extra payout, basically. Commissions are different. So you get lower commissions, proper exchange commissions, by the looks of things. I don't know. I don't know. Are you in them? If so, are they good? You tell me. I've never had one. I don't hold any accounts long enough. It's not the way I do it. I say that, I tell a lie. I have got my Forex funds, which is over, well, I held it for 3 months, but that was only because I reduced the risk as soon as it was funded. But that's it. Never held anything for longer than that, which is why I never pay any attention to any scaling plan, which is why on the website with the comparison, I just don't even entertain scaling plans. So all I'm interested in with the payouts is, what is the initial profit split? Month 1 profit share. That's all I'm interested in. We know the statistics. It's less than 1% of people hold an account for more than 1 month after getting it funded. Yeah. So why bother with anything that is over a month? You're not going to get there. You're going to get paid, hopefully, if you can get a good run after the evaluation phases. You're going to get that money. That's it. You're going to then blow it. Or you're going to hold on for another lucky month. Or you can reduce your risk down dramatically, which means that you probably will hold it longer, but you're not going to hit those targets they need you to get to the scaling plans. The scaling plans are virtually impossible to reach. Even the first one. Just don't know. And there's nobody. If you go into the forums, go into the Telegram channels, go into the Discord channels for the prop firms. When you get funded with them, you get access to funded channels. You don't hear anybody in there that's like, "Oh, I'm on my second scale up to 1 million." No one. No one says it. No one's getting there. I've done some tests with the ORB, but I used third candle breakout from the open. If that is a inside like today, then use the fourth candle, but I have to do it manually. Or can the current ORB backtest it? No, current ORB doesn't do anything like that. You've done some tests on it. But I use the third candle breakout from the open. Yeah, so if you're an inside bar, basically, yeah. You see, yeah, I mean, inside bar breaks are great. If the initial ORB doesn't work, what you tend to find is when you get, today's a really good example, actually. So when you get the initial break, direction break after that 5 minutes, it's not a really good example today, actually, but we had that fake out to the upside, fake out to the downside. Usually then you find there is a consolidation where you get an inside bar. This is not quite an inside bar, but close to it. That's usually where the move starts. So like people like Tom Hugard have their versions of the strategies, like the breakout strategies, which work after the open. So you either get the ORB, which is where you make all your money, or the ORB doesn't work, and then you're basically looking for an opportunity to get in. There's millions of ways to get in after the initial break, obviously. But inside bar breaks are very good. So, but you never know when they're going to come either. So, you know, like Tom's, bless him, having a nightmare, absolute nightmare. Lost an absolute fortune over the last few weeks. Euro odd, Australian dollar still getting hammered. But, you know, every strategy will lose. So if you take inside bar breaks after that, they will fail as well. They will have a failure rate. So everything has a failure rate. It's the risk reward. And the reason the ORB strategy and the ORB EA works isn't because it's clever. It's because it knows when the volatility is coming. What's the one thing we can't do? Time the market. What's the one thing we can do with the indices? Time the market, because they have an opening bell. Nothing else has an opening bell. So the only thing we can time is that. That's why the ORB edge works and why it's been around for decades, because it's a strategy that we know has high volume, high volatility, and high movement at a specific point of time. If that doesn't work, you're back to when is it going to work? And if you take the fourth candle, the fifth candle, the sixth or the seventh or the eighth, at some point, probably you're going to get it, aren't you? But it's not going to be the fourth or the fifth or the sixth every day. It's going to be something. It's not going to be that first inside bar. That first inside bar is going to whipsaw and it's going to cause a second inside bar, which is going to work. So if you took the first one, that would fail. But if you'd have taken the second one that day, it would work. There's always a but and an if with everything, isn't there? There's no way of formulating an exact strategy that works every day. So I've tested the ORB EA, obviously, that I've got out and is out there. That version is an accumulation of all of the back testing I've done with every variation of time-based breakout, if you like. So I've tested Tom Hugard's got the school run strategy, he calls it, which is this second 15. I've tested that. I can't get that to be profitable long term. I've tested the advanced one that he's got. I can't get that to be profitable. So there's all sorts of ways and means of taking a breakout, but none of them are consistent. You will make it some days, and some days you won't. But I've tested loads. And with the ORB, you can test all sorts. You can test all of Tom's strategies, all his not inside bar breaks, all of his school run strategies. So, there's as long as there's a mechanical rule set, you can test it. But it doesn't do inside bars. But inside bars, I know work. They are a brilliant strategy. The Price Action Toolkit does it. So, wrong one. The Price Action Toolkit, you can use 2 inside bar breakouts, which is called a 2 IB inside 2 inside bar signal. So that is a variation on the inside bar where you get 2 inside bars. So you need a break, an inside bar, and then you need an inside bar on the inside bar, and you take that break. But if you want to take an inside bar break like that one there, just literally had one, look. There's an inside bar break. So you would have taken that one long. Is what you would do on the Price Action Toolkit. When you see this inside bar forming, you would put a buy stop, sell stop last, and a buy stop last. And that's buy limit. It's below. But you would, you would basically take whichever one went. Because again, an inside bar break is an accumulation. You have no way of knowing which way they're going to go, do you? So, yeah. Satan's flip flop. Yes, strangely isn't aware. Isn't aware of what? Oh, the take profit trader. Yeah. Don't know. Never got there. Like I say, never got there. That's why I'm not aware. Never been offered it. It's like saying I've never been offered a cup of tea at the Ritz because I've never been there. Simple. Haven't been to the Ritz. Therefore, I haven't been offered a cup of tea there. I have never made £5,000 profit on Take Profit Trader. Therefore, I've never been offered a Pro Plus account. ADR, Aussie dollar Swiss. Aussie dollar on the march today. So all the ADRs today, Aussie dollar rated. Aussie dollar Swiss. ADR, that's also a monthly level. There's the monthly low, look. Hourly time frame. That's that really bad monthly one. So this isn't a great monthly low. That just happens to be where the monthly low was at the start, basically, of that monthly rally. So this is the level I'd be looking at. But extended on the march. So Aussie dollar really struggling at the moment today. Really wish I'd have held the Aussie dollar yen, but never mind. New Zealand dollar yen will be coming down as well, I would imagine. Same with the New Zealand dollar pairs. They're not particularly strong this morning, so. Right, I'll leave it there today. Anything else you need, let me know. I'll be in the Telegram group. I'll be back this afternoon at 2:20. We'll have a look at the ORBs for the NASDAQ, the DOW and the S&P. Doubt anything here will have moved, but bank what we can bank. So we'll see what happens there. But anything you need to be in Telegram. Otherwise, I'll be back tomorrow morning, 7:50, same time, and this afternoon. So have a good day, and I'll see you guys later.